Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Monday, January 7th, 2007. Well, today was the first day back after Friday's massive sell-off, and we know how the NASDAQ got crushed, and we know how we talked about how the large cap tech was the one solid force behind the market still holding some of its gains, and how on Friday that was the first chink in the armor here. The first little dent in that armor, and could possibly signal further downside in the markets should these large caps not get any footing and continue to fall. And today we saw an interesting trading market. Not only did we see some upside during the day, but we saw some downside. It was kind of a market where things came up, down, and every which way, but ultimately settled flat. And often, as you guys are probably aware of at this point in the videos, where those of you that have been following the videos for multiple months now, you understand how after a large move, it's often that the next day after that move, you get kind of a very quiet market. You get a market where nothing really happens. Maybe you're up and down in every which way, but ultimately you end flat. And that's exactly what we did today. So let's get into the charts today and we'll go over that. The market early, and this is the intraday chart of the NASDAQ, but I think we're going to start out with the ES futures chart. And this is the March 8th contract of the E-minis. And let's get our trend tools out here so we can do a little analysis here. Now, what's so beautiful about this is that there's ultimate symmetry in this chart. And you guys can probably see it as clear as day here. But what I want to first start off with is the market over here, pre-market. You know, 5 o'clock, 6 o'clock in the morning, and again, these are Eastern times, so in New York, as I sit here in New York in the office going over this video, but you had the market trading to the upside, and the futures were positive, and basically what happened here is once we got to around 9 o'clock, right here, 9 a.m., about half an hour before the market opens, the market started to sell off. And you can see the fall that it had. And this was basically a result primarily of probably panicked amateur sellers from early in the from Friday who got home and saw that they had large losses, got scared. But ultimately, you had to have a market where it filled the gap, and that's exactly what we got. And I'll show you how important it is to get a gap fill. But that's ultimately what we got here. We sold off, filled the gap, bounced off that gap fill right here. So here's the gap fill right here. All right, and this is again on the NASDAQ. So I'm talking really more about the NASDAQ here, even though I'm showing the chart. But what I'll show you quickly here, we'll flip over to this chart, and that's exactly what you can see right here. All right, on the NASDAQ, you had this gap up, then we filled the gap, got a little bounce up, and then we started to sell again. And the selling was pretty intense till about 10:30. At 10:30 on the NASDAQ, you can see that little bottoming tail, which is a dead signal we might be ready for a reversal in trend. In addition, you can also note the stochastics down here on the dead bottom. So you have the stochastics very low at this point, and also the bottoming tail, and that's what's going to signal the move to the upside. So let's flip back to the ES chart, and you can see the bottoming tail even more beautifully here. And this is the ultimate bottoming tail. What you love to have is a sell candle all the way down, and then before that candle closes, and we use a 10-minute intraday candle, you like to have it close green, which means it went positive for the candle, and in the very top of that candle. Alright, so see how it closed right up there. That's a dead signal. What you look for then is a break of the high of that candle on a chart like this where you have a hard sell, you have the bottoming tail, a break on the next candle of the upside, and you go off to the races here, and you have a nice rally, even taking out the 20 moving average here. Well, this is the 20, but faltering at the 50 moving average. Now, what we had after that was a sell candle, which took us back to that 20, and we tried to break below it here. But notice again that bottoming tail, and again we closed right on that 20, which signaled another buy, and up we went through the 50 moving average, almost to the 200 moving average. Now you got a little bit of a tail on the top there, though it's not a very good one. And ultimately we sold back down, all the way down to the lows. Now, those of you that are into the technical side of things, you guys should know what this is by now. And look at that nice little double bottom formation right there. And you can almost look at this perfect triangle. And when I talk about symmetry, this is ultimate symmetry, folks. You don't get any better than that. And again, I always say the first hit of a double bottom, especially if it breaks the low. In this case, it did not break the low. The low on this one was slightly lower, but the closing candle was lower. So it's a matter of semantics here, kind of like which way do you want to look at it. But ultimately, you had a move down here to a double bottom. First move to a double bottom, ultimately, usually I'd say percentages are better than not that you get a nice solid bounce off of that. And look at the rally here. Now, Bush came on TV today to talk a little bit about the economy. The markets didn't really react to him. In fact, they kind of sold off at one point, then they rallied back a little bit, sold off again to new lows. But Paulson is going to be on TV tomorrow, starting at 8 o'clock, and I think there was a little short covering ahead of that in anticipation of Paulson being on TV. You know, maybe he says something. Also, ultimately, folks, the markets are oversold here. Now, it doesn't mean we're not going to go lower, and I want to stress that, folks. You can see here, and we're going to go to the NASDAQ daily because it's easier to read. You can see the fall we've had ever since right before the new year. All right, we got that little bit of a Santa Claus rally, which in these videos we predicted, which was right here. But right before the new year, we started to sell, and we've pretty much sold straight down. You're talking about a big, big drop at this point. And some key numbers. You guys know how we talk about, you know, do we close on the moving average? Do we close below? Do we close above? Do we close below an even number here or above? We closed on the NASDAQ today at 2499.46. So we closed a tick or two below here, that 2,500 mark. Now, we don't know if it's significant yet, but it bears watching that maybe that's signaling a smaller close or a less close than 2,500. Could that possibly be telling us that there is some more downside to come? Now, if they had closed this at 2,501 or 2,500.05 or something, maybe we can go out on a limb and say maybe that is telling us a little signal here. So we're going to find out how significant tomorrow this close on the NASDAQ was right below that 2,500 mark. The other thing I want to point out here, and we'll go back to this chart in a minute, but you guys know how important I've talked about research in motion in the chart, and how key the fact that they just wouldn't close this chart below 100, and if they did close it, they didn't confirm it the following day, and they kept on somehow just every day, whether it was trading down $1 or $2 before the close of 100, right before on the research in motion chart, right in that last 10 minutes, they would squeeze it right up back above 100. Well, today we got to close below 100, 99.83, and this is the daily chart on that. So during the day, they had a squeeze on it, a beautiful squeeze right here, to bring it back above 100. But towards the end of the day, it closed, it got below, got a bounce, but not enough of a bounce here. So the question that, again, we have to look at is, are these signals here, are these large cap techs now breaking down? And if they're breaking down, I do caution everyone, don't step up or be very cautious in stepping up to expect a bounce. Now, it's a very tough position here because the technicals are mixed. And what do I mean by that? Well, sentiment is very bearish. When sentiment is overly bearish, it usually can dictate a possible bounce in the markets. Alright, so that's one asset we have. Now, the technicals are the other asset. Now, let's go back to the NASDAQ. Number one, close below 2,500 even by half a point here. You can possibly make a stretch here and say, well, maybe that's a negative. At the same time, the charts here are very oversold. I mean, this type of drop, you definitely need a bounce at some point. Alright, so maybe that's leaning towards the positive. Paulson on TV tomorrow, maybe to the positive. We know Bush has been meeting with the PPT, or on creating some sort of economic stimulus, and I do the quotes with my hands even though you guys can't see it when I say economic stimulus. But ultimately, I think that's coming too. Whether or not a rate cut comes before the end of the month when the Fed meets is another story. So what I'm saying here, folks, is that it's a very, very cloudy picture. The technicals tell us one thing. The sentiment tells us a possible another thing. The close on the NASDAQ and on research in motion tell us another thing. The fact that Bush is putting together an economic stimulus plan is another thing. The Fed possibly lurking out there cutting rates before. Now, yes, we all say, or at least I say, oh, great, they're going to cut rates, the dollar drops more, you know, where does it end? Where does my dollar, you know, when is my dollar going to be worth pennies on the dollar, ultimately, you know? But in realistic terms, folks, a quarter point cut is already factored in. That's a 25 basis point cut. A 50 basis point cut is ultimately probably factored in or close to factored in the dollar. So they can cut up to that much and the dollar will not lose much ground here. It's already fallen down the last week or so based on the anticipation of a cut. So that's my point here. So that's another facet to look at. So my point here, folks, is, and I keep on saying my point because it's very important for us as traders to be on high alert in this environment. This is an extremely dangerous environment. Not because of the downside is so drastic, but because the downside and the upside could go either way here. Alright, we are oversold in the charts technically. But at the same time, there are many negatives out there. But at the same time, again, Bush and all these other facets. So, to be honest with you, I'm still sitting mostly in cash. I have a few small cap swing trades. I love my small caps. They don't get affected quite as much in this environment. And I think there are a few that are bottoming out here. getting ready to possibly move. But when it comes to large caps or to ETFs or these type of plays, I am very, very cautious because I half expect each morning to wake up at this point to the futures down 50 on the NASDAQ or up 50. So in that case, you got to be very, very careful. So in any case, enough of my ranting and raving. Let's just look over a couple things. The large caps, as I said, continue to sell off. Baidu, down another 17 points almost today. Google, down almost 8 points. Apple's getting crushed lately. Apple down another 250. Apple was intraday down as much as 8 points here, all right, plus. And look at Apple, down below its 50 moving average. If it falls to that 200, you know the market's in trouble. That would be an ugly fall on Apple. The 200 here looks to be around 130 and change. That's just a rough estimate. But long story short, there's a crazy market here. I urge strong caution, and as I always say, these videos are just for entertainment purposes and should not be construed as investment advice in any way, shape, or form. Go talk to your financial advisor to get the lowdown on things that you're really interested in. But again, have a wonderful day, guys. Great evening. Be ready. Come join the Intra Day Stock Chat. We discuss this stuff all day long. We come to a consensus. It's a great group of individuals. I'm a big fan of everyone in that room as they all contribute immensely to the chat and help everyone else out, including myself. I might be maybe the top echelon of trader in there, but everyone helps me out just like I help them out, and I appreciate that. Have a wonderful day, guys.